Good morning, traders. Today is Thursday, November 10th. My name is Charles, and this is the Pirate Traders live stream. No point in doing any pre-market analysis here. The market is just reacting to the good CPI data, better than expected. And obviously, the market is taking that as bullish. So the first order of business is the gap fill. It's a big gap. So everything above yesterday's high is considered a gap. So the first order of business for the market in a normal, regular market would be a counter auction to that overnight inventory looking to try to fill that gap. Will that happen today? I just don't know, right? When it's based on the market reacting, having an emotional reaction, it is very, very difficult to predict precisely where it'll run out of momentum and what will happen. So trade with caution this morning. It is, of course, bullish, but the first thing we want to see is we want to see them either fill the gap and get down to yesterday's high at about 11,050, or try to fill the gap and fail to get to yesterday's high. Either of those scenarios could set us up for a gap and go, which would be bullish. So obviously seeing this big of a gap is bullish all on its own, but it is very, very hard to guess how much more momentum to the upside we can really get. This was obviously short covering, right? The market was chilling down here at yesterday's lows all night long, waiting for that news to come out. And when it did, this was all the people who were short having to cover. So until they run out, the momentum can keep going. But as soon as they do, boom, the thing comes crashing right back down. Because it's not new buyers who are excited trying to take the market higher. It's just shorts covering. So going to be trading with some caution this morning. Emotion is not to be trusted. Okay, so a push higher from the open is a gap and go. If they pass back through the opening price now, back through 11.3, looks like 58. Well, they just passed through it. That is an attempt to fill the gap. So they are now trying to fill the gap. Can they get to yesterday's high? All right, so much for a gap fill. Chilling with Dylan says support around 38.50. And Fighter Pilot says gap fill is 38.60. Or sorry, half gap fill. The reason that he's bringing up the half gap fill is that the gap fill itself is a very, very high probability thing to take place. But it's not a guarantee. It's probably, I don't know off the top of my head, but it's a high probability, but not a guarantee. Whereas the half gap fill is an extremely high probability. But I would just always caution people when you have a large gap, keep in mind those are less likely to fill. It's almost like, a smaller gap, the market goes, yeah, we could do that. We can make that happen. So they really try. Whereas a larger gap, they'll instantly give up on it if they can't fill it. So as always, we'll be looking for what happens when the market gets back to the zero line on the ticks, wherever it is price-wise. Do they bring in buyers at that point? We got 170 people hanging out, but only 56 likes. Smash that thumbs up if you're looking for a gap fill. Looking for a gap fill, trying to do it. Looking for a gap fill, can they pump? Mac Vince says, window traders show contracts traded at 38.15. Contracts traded at 38.15. It shows however many contracts traded at each level when the market was there. So if you're looking for 38.15, you would look for, how many contracts traded. Well, this needs to be updated. How many contracts traded during the overnight, during yesterday, during last week, stuff like that. But yeah, it shows however much traded at that level at that time. Speaking of window trader, it got mad that you started asking questions. It was like, how dare you? How dare you question my ability to show volume? MacFin's trade of 8 doesn't show any contracts there. That must just be a glitch. Mark, it would be a kick in the shorts. In the middle of reading a comment, it disappeared. Oh, there it is. Oh, he changed it to colones? A kick in the colones if the gap fills. And then the market goes red today. That could totally happen, right? I don't think that's what will happen, but I'm saying it's very possible. This is emotion, right? This is not real buying in the overnight. It's just short covering. So for that reason, it can't be trusted. All right, let's try this again. Yeah, you are right. My data is showing a gap there as well. So the move would have had to have happened in like a fraction of a second. Crazy. Them news bots work fast. John Lash says, I remember when the move started, my trade of 8 froze for a good 5 seconds. Then the price jumped like crazy. Yep, those bots are on supercomputers. They can move quick. Mateus, if you gap and go up 500 points, where are you going? Well, that's what I started with the show with today. Today is going to be a nightmare. There's just no two ways about it. Whenever the market does something that intense, that emotional, it's just really hard to predict. So as of now, this is a gap and go. As of now, it's bullish, and technically they could keep pumping it higher and higher and higher. But then the question becomes, who's really left to buy? You know what I mean? When it makes this big of a move this quick, who's excited to buy at the high? So maybe they can keep pumping it, or maybe it's just trying to run out of steam so it can crash and burn. Your guess is as good as mine. Ticks are bullish. Screwball, if market is overshorted, yeah, no, like I said, guys, I 100% can see the market going straight up all day today. I could also see it turning around and going straight down all day today. So that's what I'm trying to explain is the problem. There is a case to be made for all day short covering, for all day FOMO buying. There's a case to be made for a complete reversal, and they're equal in my mind. So let's just not try to jump to any conclusions too quickly. And definitely do not fall in love with any single trade. All right, so passing back through the opening price should be the signal that it's a gap and go and that they're not going to try to fill the gap today. So now to truly be convinced, I need to see new buyers up here at the overnight high. So this is where we want to see the market hold the support. All right, well, that's support. That is new buyers above the overnight high. So I am bullish as a gap and go. I remain bullish as long as the market remains above 38.84. All right, so now we're going to test that half back, okay? Right as we get to that zero line. That should tell us whether the buyers are going to remain in control here today. And we are looking for support. All right, so we just pushed into some resistance, a little bit short of where I was looking at. I was looking at 3708, or sorry, 3908 as the next potential resistance to the upside. Once we poke through that, then 3919. And it does appear to be new buying, not short covering. So it's a little bit bullish to see. Peter, Charles, do you trade days like this? And what do you normally look for out of interest? Yeah, I mean, I took one trade today. I took a gap fill trade. So the market opened up. It started pushing higher. Then it turned around and it came back through the opening price. So I went short at the opening price and I put my stop above the high of the day at that point. The market then sold off. I moved my stop below my entry. And then when the market came back up, it stopped me out. So I made about a point. Winner, winner, chicken dinner. So that is the way I always play a gap fill. And now I am buying support and selling resistance on the gap and go. Once we passed back through the opening price again, then I knew the market was no longer trying to fill the gap, which was the first setup, but instead was a gap and go, trying to go higher. So I switched from looking for shorts to looking for longs. And that is what I look for on a gap. Every time, 100% of the time. All right, so now the B period is pushing above the A period high. That means the initial balance is to the upside, which is bullish. So we have a gap and go. We have initial balance to the upside, and we have the value area pushing right up against the high of the day. All three of those are signals. The momentum to the upside is not over. So we are looking for support. Michael says, "Is the sky the limit today?" Again, as I've said, there's literally just no way to know. Okay, it's emotion. The emotion will just last as long as it lasts. As long as there's still people opening up their computer, being shocked by the move that's happening, and having to react to that shock, whether that is they were in positions they now need to close out, or whether it's FOMO, it's waking up, seeing the market higher, and then feeling that feeling of anxiety that you missed your chance to get long. All those people need to work their way out of the market first. All the emotion needs to work its way out. And as of now, that has not happened yet. We are still bringing in new FOMO buyers at the high. But as soon as the emotion does run out, the market can retrace very quickly. So stay with the momentum as long as it lasts, but as soon as it breaks, recognize the weakness below. Speaking of reasons to run out of momentum, we are also testing this area where we ran out of momentum before. Ran out of momentum back in September, ran out of momentum a few weeks ago. So this would be a great area if the market wanted to have kind of like a look above and fail that comes back down. This would be a great place for that to happen. So can we keep bringing in new buyers up here at the highs? Can we keep this going? If not, when it breaks, there's plenty of reason for the market to pull back. But for now, the buyers remain in control. FOMO faux show. Dylan, we're on the 20 MA on the weekly, the 125 MA on the daily, the 500 MA on the 4 hour. What the heck kind of charts do you have in front of you, bro? Well, this is the 75 MA on the 2.5 hour chart and the 43.4 MA on the 4 hour chart. It's pretty simple, actually. I believe you. I believe you. I always say, though, the thing is, whatever you look at, it doesn't matter what you look at. It's just that you always look at those same things. So as long as you're looking at the 125 MA on the daily and the 500 MA on the 4 hour every day, then it's all good. But if you were just searching for what could be support and you or resistance, and then you found those MAs, then it wouldn't work. All right. Well, I'm not calling for the momentum to be over here, but that could be the end of the momentum. And we will know if they can hold these ticks above the zero line. So it looks like the support at 39.09 is about to break. So we're going to head back down and test this lower support around the overnight high. They got it. They can poke the ticks below the zero line, but they got to pop them back up above. If they start to hold the ticks below the zero line, then you know that momentum has run out. That FOMO has come to an end. So we're keeping an eye on the ticks. Mark says, I'm going to go short, catching a rising knife. Yes, do not fall in love with that trade. You take profits quick. Blackbird says, I'm new here. Can you talk about the tick? Welcome, Blackbird. Blackbird singing at the market open. Take these wings and learn to trade. All my life, I've been waiting for a dip that I could buy. Anyway, so yeah, how do the ticks work? All right, so what the ticks are basically measuring is the buyers versus the sellers on the NYSE, the actual exchange itself, buying and selling the actual underlying shares themselves. So the general way that I watch it for, there's two things I'm paying attention to. One, is there a pattern? So right now we're starting to create lower highs and lower lows. There's actually a pattern of losing momentum all morning. So if the market is trending higher, it's gaining momentum. If it's trending lower, it's losing momentum. If there's no kind of trend, if it's just making a big tick this way and a big tick this way and just kind of going up and down, then that is rotation. Okay. The next thing I'm looking for is, are they above or below the zero line? The way you think about the zero line is like, that's when, if we're above it, there's more people going long. Not in a literal way, but just as a way to kind of wrap your mind around what's happening. More people are going long, and if it's below, more people are going short. So for example, if they're trending higher and then it can stay above the zero line, you know we've been gaining more momentum all morning, and now we have more buyers than sellers. So that would mean we're likely to be able to keep it going. The same thing is true on the way down. That's why I say we can poke the ticks below the zero line here, okay, to come in and test the support. That's okay. But as soon as we find the support, we need to pop those ticks back above the zero line. Because if we don't, what are we doing? Well, we're slowly losing momentum throughout the day. So far this morning, we've been slowly losing momentum. So if those ticks get below the zero line and stay there, well, then we know the sellers are starting to win. Okay? So I'm still looking at this chart for where support and resistance is, but I can see if it's working on this one. Che, I didn't receive the email this morning. The email goes out when I switch the streams over. So it'll go out today at like a couple minutes past 10:30. Speaking of which, I still have to make it. Scooball says this node is becoming tricky for me. Yes, the question, is it support or is it resistance? My vote right now is for support. My vote is that we are still bringing in new buyers. The thing that will prove me wrong, obviously, will be those ticks, right? If those ticks start to break below the zero line, then I know I'm wrong. But I think we're bringing in new buyers. And my reason for that is the advancers versus decliners. It has a very pegged vibe. And remember, that can be a powerful tool. When it stays in a super tight range like this, and it's just kind of slowly grinding sideways, very, very tight, that is a sign that you should buy every dip and sell every rip. It might be a market that feels very choppy, but it is slowly working its way higher. So I'm going to stay on the side of the bulls here unless those ticks fail me. All right, well, the C period is upon us. So nothing has changed as far as I'm concerned. I still see this as bullish. I still see it as a gap and go. A gap and go is a sign of momentum, that there is still new buyers going long in the market. So I remain bullish above the overnight high, looking for support there. So looking for support around 38.95. If that breaks, if 38.95 breaks and we start to pull back through the opening price, then they may be once again going for a gap fill. So I could potentially get bearish there. But first, let's wait and see if there are buyers waiting. This is the scenario I've been talking about all morning. So we finally dipped those ticks below the zero line. We finally get a chance to know, are there really still new buyers in the market? If they can find support, poke it back above and stay above, there are still buyers, okay? So this is kind of that moment of truth. I remain bullish for now, and I'll change my mind if we break back into that overnight range. With that, I bid you farewell and wish you the best of luck. We'll see you here tomorrow morning. If you are a member of the brigade, head on over to the private stream where all the cool kids will be hanging out.